a lot of HVAC, plumbing, and electrical contractors are ready to hand their business over to the next generation, but they have the problem where they don't want to outright sell the business to their son or daughter coming up because they don't want to pay the huge capital gains. But the son or daughter doesn't want to take over until they like actually have ownership. And so this is a problem that I see a lot. And it basically the setup currently looks something like this. So you have the business, right? And then in it you have your trucks, right? And with square wheels. And then you have, right, probably a building as well, right? And so what happens is, and then you have the operations as well, okay? So you have everything inside this business. And so all the money comes into it, and then all the money goes out of it. And so when you sell this business, it's worth a lot of money. And so to sell it means you're going to pay a ton of capital gains. And then your son or daughter may not want to like carry that much debt. It just may be too much debt to pull out of the business. So here's the way I typically set it up. It's not the only way to set it up, but it is a good solution to this problem. Instead, what you can do is you can have the ops of the bill of the business, right? So your service contracts, the phone number that people call into, where all the sales employees get paid out of, right? And this is business one. But then off to the side, right, you have a separate LLC, a separate business where you have the buildings, right? You have the trucks, and you have all of the assets. And what ends up happening is you have an asset, so a company that basically holds all of the assets. The ops company can be owned by the son or daughter. They can pay rent for the assets to the senior, right? And they can own the operations part of the business, and the original owner or the parent can own the assets. And what'll happen is if something were to happen to that parent or both parents, then these assets will go to the heirs, right, with what's called a step up in basis. So one of the reasons you don't want to sell all of these assets, like for instance, let's say you have a building. So let's say you have a building that you paid $1 million for, just to give me easy math, right? But that building, first of all, is now worth, let's say, 2 million, right? But you've also taken depreciation on it, right? So the basis, or what from a tax standpoint, what it's still worth is only 500K. So if you sell that building, you got to pay the difference between this 2 million and this 500K. But if something happens to you and you pass away, then the heir will get a new basis of $2 million. That's not true if it stays in the operating business, if it stays in an S Corp or a C Corp or something like that. The corporation keeps the basis, or keeps the basis. While if you have it in a separate LLC, a disregarded entity, then it will get a step up. And so that can make a really big difference from a tax standpoint when those assets transfer. And then it gives the senior kind of a passive way to get income out of a business. And then the son or daughter can actually take over operations, own 100% of those operations, and they get to call the shots.